you should start earlier. Don't quit your job. Don't sell your business yet. Get that, you said saddle time. Get that time in. By the time that you're ready, you're way ahead of the game. Trade small, practice, learn the skill, and then, show me you can make $5 a day. We show you how to make $500 a day. Well, hello everyone. Welcome to another episode of After Hours with Traders. Second week of January went by fast. We're going to have a long weekend. Martin Luther King on Monday. The market is closed. I have Brian with me.
Hello everybody, and good Friday afternoon to all of you.
And we have Thor with us from sunny Florida because Ardi was not feeling well, so we decided to have this one with Thor. Thanks, Thor, for coming, especially in such a short notice.
Oh yeah, thanks for having me. I'm stoked to finally get the invite to talk with traders. I mean, I was like 4 episodes. I'm like not even in yet. Like, what's going on here?
Well, thank you so much. Well, we are trying to really, it's more like an experience for us. We're trying to see what's the best way of doing it and the topics and everything. And we get a lot of feedbacks from YouTube and the comments and what people want to hear and how we want to do that. But you are one of the traders that our community really like. You have contributed a lot to our community, especially with your volume price analysis and pivot points and the way that you're reading level 2 and volume. So thanks for everything that you're doing for the community. I'm sure this video gets a lot of comments and a lot of likes because of you. Tell us about your trading in the first 2 weeks and what's your plan this week and where do you see yourself in the next year?
So first off, I appreciate having me on. It's really been great being a part of the BBT family. The VPA I've brought in, but this is all stuff I've learned from within the community, and I've just brought specific focus to. And luckily for me, and thanks to you, boss, that I've been put in a position where I've been able to actually spend time to put together this educational material for our team, and it's been really fun to see it. People actually grab onto it and enjoy it and start using it, and you see the lingo kind of start coming out about it, and you're like, wow, this is really fun. So I'm enjoying that a lot. The first 2 weeks have actually been pretty solid for trading. I've had 2 of my my most profitable trades to date during this beginning of the year. Actually, we've brought in recently Ed Martin and Average Joe, and I've been going over and kind of stealing some of his material. And I'm starting to look at some of the things he does to hold longer and keep bigger. So I'm getting my entries, which are quite precise at times, and now trying to pair that with some of his longevity for holding. And it's created a couple of really good days for me, which has been great. The past couple of days, not as much. Been really choppy the past couple of days, but that's where we are on this market. Big downs, little ups, and but basically just bouncing in the same place. I mean, I think if you bought SPY a year ago, you basically haven't made or lost money. I think it's pretty much in the same spot or something like that. So
I think 1 year SPY is still up, but IWM is almost negative. So that index is really down.
I mean, I was going to say, I mean, if you look at the IWM, we've just been in a range pretty much since February.
Last year.
Except we had this one sort of big breakout, I think it was November, but then it just pulled back. So yeah, the IWM's been challenging, but
at least it's holding that level, which is means that the whole year with all of the issues that we had, IWM really held this range.
Yeah.
And when they broke out because of, I think it was the infrastructure bill, and I just got trapped on it, and I should have taken loss, or even I could come at break even, and I'm still in it. But it is what it is.
Yeah.
Well, we've got a good situation going. I think as you're looking at the market overall, you do see this kind of interesting balance in the market, right? Which is you kind of got inflation keeping things from going up, but you have Fed backing keeping things from going down. So it's basically just causing this, like no one's afraid to hold their positions because they genuinely believe the Fed will step in and support things if things get too rough, right? So there's really no reason to panic sell just yet, but of course no one's like super stoked either. So no one's like, yeah, let's just go long, right? YOLO, let's do this, sell the Lambo, I'm ready. Right, no one's throwing any of that stuff into the mix yet because they want to see confirmation that the market's going to break and going to move, and it's just created this period of indecision we find ourselves. I like calling it a kangaroo market because we're not just going up or down, we're just kind of bouncing up and down.
Definitely
Yeah.
IWM is kangaroo.
Yeah. Well, no, I mean, you've hit on a point that I was also, I'm 100% with you on this. We're in kind of a market where, sell-offs get bought and then, but there's no volume, there's no impetus to push the market higher. So you just get into this choppy range, and that seems to be where we are right now in the markets. It's just there's no committed buyers, but then every time we get a dip, there's some people that'll come in and buy the dip. So, and that was sort of indicative of the market today.
What is the best strategy in this kind of market? I know options traders are having a lot of fun because time decays in their favor and in the range. How do you?
Theta. You try, if you can find some stocks that, like I was looking at Facebook and, on some of my swing trades, I mean, it looked like Facebook sort of trading in a, I think it was a 320 to 350 range. So you can go in and sell the calls, upside calls, sell the downside puts, and just let the puts and calls just decay off, and just collect the premium at the end of the day. I mean, that's one strategy. And if you're nervous about being naked puts and calls, you can always buy an upside call and buy an upside or downside put if you're really wanting some to make sure if you do go offside, you've got some insurance that you're only going to lose so much. So,
Thor, did you get yourself dirty in options too, or no? Not yet.
So it's very funny, actually. The first exposure I ever had to the stock market was when I worked IT, and I was actually a support person for an options trading platform, and I know nothing about options. 2 years, by the way, as a support person. It's kind of embarrassing to admit that I picked up so little in so much time. But I've picked up here from there. I find it really fascinating the way like Ed uses an option scanner, even though he doesn't trade options, to kind of see stuff like that. So there's a lot of growth to always do in here, and I'm still working on mastering this equities deal and really trying to focus on stocks. And so, but I look forward to pushing in. I know Artie's reached out to me and said, "Hey, buddy, if you need the lowdown, let me know. I'll run you through it." And I'm like, I can't wait to take him up on it, but I'd have to create the mental space for it, and I'm just full right now.
Awesome. Speaking of inflation, you mentioned that this week. Jay Powell, the chairman of Federal Reserve, went to the Senate for the reconfirmation hearing. I mean, he's going to be confirmed. And there was a lot of questions. I actually listened to a lot of the whole couple of hours hearing. There was a lot of discussion about employment and of course, inflation. One of the things that he said that inflation right now, what we are seeing 7%, is not more because we have so much money. So it's not about the demand, but it's the problem of supply, that there is no chips, so there is no car coming, there is no inventory. And a lot of people say, oh, you printed so much money, and then people want to buy everything, and everything's expensive. But based on at least what he said, that one of the big contribution to inflation is cars, and just because there's not a lot of inventory.
Yeah, and I think the other thing that's really contributing to the challenges we're having right now, the supply chain challenges, is the labor force, and this is only being made worse at this particular point in time because of this COVID variant that's just spreading like wildfire. It's keeping people home. Andrew and I were just talking a few minutes ago about how we're going to the grocery store and some shelves are like partly empty, and you're thinking, well, where's all the product? And I think I think that's one of the big problems that we're seeing right now. And they're even highlighting it as an issue that there's just, you've got the great resignation, as they're calling it, and people, the workforce is shrinking, and there's just nobody to produce stuff.
This is amazing that a lot of people are not coming back to the jobs that they had before pandemic.
Yeah.
Well, I kind of started to switch pre-pandemic, but I was in IT before, and I'm a stock trader now, and I'm certainly not going back to IT. I like this gig a lot better than that one. And I think a lot of people, I think COVID has actually created, I'm going to go with a paradigm shift in employment. And I think it's going to take a little bit longer, I think, for industries to catch up with that. I think people and employers have both learned that you can run stable workforces remotely, that the technology exists to hold them accountable. to motivate them and to keep them going. You have the ability to pay them. You know, you have the ability to collect taxes from them. Everything that you need in order to do business, you can now do it through, you know, in the metaverse, if you will, right? You know, you no longer need to have someone come into the office. I mean, I work for you, and I've been to the office one time, and it, you know, and you know, but I was hired without meeting you, you know, directly. We actually met face to face, I think 3 months after I started working for Bear Bull. But we were able to establish a great rapport and relationship. So we've proven now through COVID that there's this new opportunity. And I think now people are starting to say, well, I want to work from home. And now employers are starting to have to figure out creative ways to make that happen so that they can entice them. That, or, you know, raise the cost of, you know, their wages to try and entice people. And that's going to fuel inflation. You know, and like Brian was saying, you know, obviously with supply not coming in Florida, they only buy the toilet paper. Apparently that's all they're really interested in, is just cleaning all the toilet paper from all the shelves. I don't know why, but that's all we're interested in.
It's just
durable goods,
bizarre,
all
right?
still there.
Yeah.
Just toilet paper.
Yeah. And it's not like we even, half the world doesn't even use toilet paper, so go figure. But, you know, but it's happening in the service sector too. I mean, just this week, you know, it's sort of anecdotal, but I mean, a couple of restaurants restaurants that have been around for a long time, closing because they can't get staff. And so what options do they have? They have to keep the staff they have, they have to pay more.
Well, that's shifted into, like, you know, now it's Uber Eats, DoorDashes, and all of these right now they've got staff, but it's 10 people manning the to-go booth because you've got a whole parking lot full of cars that are grabbing bags and taking them home to people. You know, an interesting campaign I saw Domino's running was where they're actually giving you gift cards if you order directly from a place without using a rideshare app, because they're trying to do something to kind of to kind of like work around that a little bit. But I think, like I said, I think it's a shift. I mean, I love Uber Eats. I love that I can order a Taco Bell at 11 o'clock at night while I'm working on a project for work, and that Taco Bell pops into my door. I don't need to get in my car. I'll pay the $5 to have it come to me. You know, and I think that kind of thing, there's no way people are going back from that. Why? Why would you? It's better.
Yeah, and I think, I mean, you can wrap this by saying, coming back to what you said about a paradigm shift. I mean, there's a lot of, you know, COVID has brought on a lot of changes, and particularly in the labor market. And I think it's going to take some time before, you know, things kind of settle and we find some kind of equilibrium. But right now, there's certainly a challenge with the workforce and supply chain. So you know, that's driving in part certainly where inflation's going right now.
Yeah, shifting from inflation to another topic, Thor, you used to trade a lot of stocks in play, and then I saw you more and more trading SPY and index funds, and then I've seen you trading even leveraged ETFs like SPXL and stuff. What is your bread and butter? Now you're trading more index funds, leveraged ones, stocks in play. What is it?
So it's still kind of stocks in play, but since the SPY is often in play, I find myself going to the SPY. But after watching you actually trade leveraged ones, I was like, well, I'm reading this good. I'm getting the right entry. Why not take the one that, it's a lesser price. So, you know, I don't have the grandest of trading banks. So it allows me to, you know, I can take a little bit better risk on it because I can get more shares that I expect to move further. But I still get the control of watching the ETF. But it's especially on days where it seems like every stock you're trading is correlating with the SPY. Why not just go trade the SPY or a leveraged ETF? That way you're just going to deal directly with the algos basically as they bounce around. But stocks in play are almost always where I'm going to gravitate. I love earnings seasons, which we're just kicking into, because it always, gives these opportunities for volatility. And then at that point, it's just kind of, giving them a chance to do what they do. And that's been the big change that I'm interested to see what happens in this earnings season is, will these stocks, let's say they come out with good earnings. Well, they're already really high. They've been really high for a while, but, maybe we get rotations from travel, through tech into travel or something, because tech seems to be a little high while travel seems to be a little low. And if we can come out of COVID, maybe we get some nice plays there. But until this whole thing shifts and changes with the whole COVID situation, I don't know how any of those, things do. It'll be interesting just to kind of, sit back and just kind of see how it unfolds. It's impossible to predict at this time, I guess you'd say, right?
Yeah, no, same topic. If people that have been in the trading room have noticed probably that on my watch list in the morning, I've had TNA or TZA. I've traded TQQ and SQQQ. I get the 3 Qs in there. But, beta ETFs for both IWM, small caps, and the Qs. And right now I'm finding those patterns are setting up a little bit more predictably for me to take advantage of those moves. And I've had some really good trades this week on TZA and flipping back to TNA when it looked like a bottom was being put in on the index. They just seem to be moving a little bit more predictably now. So, again, when you're trading, you always have to be flexible. You always have to be ready to change strategies, ready to look at different ideas. And, and so I'm finding right now that these levered ETFs are actually giving some good opportunities.
Recently, a website reached out to me and they asked exactly the same question from me, that can you write a few paragraphs about trading in individual stocks or indexes? And I went back about the conversation that I had with Jared recently, that Jared said the communities more and more these days are trading index ones or correlated assets with the market. And I realized that yes, because the market has been so volatile that you don't need to find the stocks in play. You just pick NVDA, moves with the QQ or TQQ, which is the leverage ones, and the volatility is enough for you to make. But there are some days that the market, or weeks or months, that the market is maybe moving very slowly, doesn't give you a lot of opportunities, but the individual stocks or earnings season, as Thor mentioned, they give you a lot of individual stocks in play that are completely independent of the markets. But since pandemic, the sectors and the markets has been so volatile that they're so it's very tempting to trade them rather than just try to find one individual stock.
Yeah, and there are lots of traders out there that just trade the SPY. I mean, that's all they do. And the SPY has options 3 days a week, Monday, 3 expiries a week, I believe. So, traders out there are even just trading options on the SPY. So, there's people that exclusively trade SPY or one of the other indexes.
At the end of the day,
Excel is fun to trade, the leverages or whatever. I really liked. I was on that short, by the way, with TZA that Brian took, because I got to cover for Andrew one morning, and the fact of the matter is when the profit of profit and I trade together, we only make money.
Yeah,
I mean that's just so he I remember the trade. He's in there and he's like, TZA is going to roll over. I'm going to go short on this thing. I looked over and I said, oh man, we're all short on this thing, and we just slammed it. And I mean, I think half the chat room went short on TZA at the same time. And I mean, in the dump after that was just brilliant. So yeah, we had a lot of fun on that one. That was for sure.
They are definitely trading more predictably, for sure. You can kind of pick out patterns, consolidation patterns, when things are getting ready to reverse. So yeah, kind of like enjoying trading those.
But you did mention something interesting, that no matter if you're a stock trader or index trader, yes, there are some technical differences between them, but skills that as a trader, like risk management, understanding the price action, realizing the balance of the power between buyers and sellers, and those techniques help you in any markets. It could be Dogecoin, it could be crypto, it could be anything. It's just, if you're a trader and you understand these concepts, it's just a matter of technicality to learn a little bit of basics from them.
Yeah, I mean, actually, it really helps you in any emerging market. One of the things that we talk about is, this could be real estate. The principles of supply and demand and inflation, overpricing, value, all of these things all apply to any auction environment, if you will. So, and that's what we kind of see ourselves in SPY, right? We're just in this high value area. So we're not going down, we're not going up. We're just, we go down a little bit one day, we come back up a little bit next day, because everyone's just happy where we're at, where we're found this nice spot. So I would almost think at some point it will take some kind of really serious catalyst to really shake us loose of this, this little, range that we're in. I don't know what that catalyst would be. But I mean, it's, I don't know if there would be a good catalyst I can think of that would just be like great enough news just to like let it go, other than like, China says we don't like US debt anymore, we give it all back. I don't know. Like what could make, something go so grand? But I mean, right now, it looks like we just are where we are. So like Brian said, we got to adapt and make sure we find strategies that are gonna work well no matter what market we're in.
Yeah, I found trying to figure out or trying to theorize what's going to make a market move, one way or another in a big way is like it's a fool's game because you can
exactly.
think of 100 things that could possibly move the market, and then something comes out of the blue and you never would have seen that coming, but that's the thing that moved the market. So
COVID, right? I mean, COVID's a beautiful example of that. Everything was great. Everyone's chilling out, all-time employment.
Yeah.
Everything's low, everything's going. All of a sudden, one day, like one phone call, everything changes. It's crazy.
So we're getting into the long weekend.
Yep.
So what is your suggestion or hints or tips or comment for traders that are going into the long weekend? And overall, what do you say to traders who are watching this video and they want to become a trader or they want to become a better trader? Brian?
Well, I think, obviously we're coming into a long weekend. It's going to be a short week next week, and we've kicked off earnings season today. So there's going to be some volatility, and particularly in stocks that are going to be reporting. A lot of traders, investors are going to be listening to, forward-looking guidance from conference calls. Numbers are one thing, but it's often the comments and the guidance that the senior executives have to say on the conference calls that really drive those stocks. So I think we're going to be in for continued volatility, if you want to call it that. We are going to be up and down. We're going to be surging a bit on good news and then pulling back, and then buyers are going to come in. So I just see more volatility, not severe volatility, but I just see a lot of choppy price action through this earnings season. I don't think anyone's going to knock it out of the park to move the markets, but I don't see anything that's really going to shake the tree and have us drop 10%. So that's kind of my thoughts as we go through earnings season.
Yeah, I'm with Brian pretty much on this one. It looks like when I look at the SPY, it kind of gives me a distribution kind of feel, the way it sells in the lows and then kind of drops volume in the highs. But again, with the current state of the Fed versus inflation, I'm kind of with Brian. I think we will have days of volatility, but I think we're going to get a little bit more of what we've had. I think we're going to kind of be stuck in this overall range, kind of up and down, until something shakes that tree, and we don't need to focus on that, right, until it happens. Once it happens, we'll know we've got something new, and we'll play that. But until now, I think this kangaroo market probably continues to bounce around. For traders that are looking to improve, I mean, all I can really throw out there to you, and it's unfortunately it's just something you can't be taught. Like any high performance endeavor, it's saddle time. You've got to practice. You've got to trade. You've got to be resilient. You got to keep going, right? So if you're expecting to get to whatever goal you want to get in a very short period of time, reevaluate, right? It's not going to be worth doing. Rather, take your time, learn, use some of the tools that are out there, right? Even BBT developing tools like the freestocksimulator.com, right? Where you can actually go there and without paying any money, you can practice, strategies. You can start learning about the market. You can start reading material. You can go to Kindle and get Andrew's book for free right now on Kindle. Download it to the app, right? So, I mean, there's so much out there. If you're interested in being a stock trader, you don't need to commit a dime right now. You can learn about the entire market with the just gobs of free resources that are out there. And then when you're ready, find yourself a good community and start, learning something a little bit more creative. But for anyone who's new out there, who's looking to get into it, that's the way you're going to do it.
Oh, I love that. Thank you so much for saying all of those stuff. First of all, thanks for mentioning that. Yes, stocktradingsimulator.com, it's a free replay tool so that you can go and then you can trade in the past in different speed, entry and exit, and you can actually refine your trading. There is a mailing icon in there. You can enter your email and then sign in a name, and actually are sending homeworks to you. And you can say, okay, what's the stock in play last week or 2 weeks ago? You can see and get some trade ideas. There are some videos and webinars for you if you are interested, but you don't have time to trade real time. Or if it's a long weekend, you're at home, you want to practice a little bit more. And you mentioned something very interesting, that if you want to be a trader, you don't need any money right now. I get a lot of emails from people, I'm at 18, 17, 19, I don't have a lot of money, or they don't even open an account for me. What should I do? I want to become a trader. Practice. Just learn the skill. By the time that you have savings, by the time that you finish the school, by the time that you're ready, or you've quitted your job or sold your business, then you are way ahead of the people who are actually now starting trading. And this is very important. Again, I got another email from someone that, hey, I'm retiring next month. I'm ready. I'm going to start. Oh, I'm in the military. I'm retiring or I'm separating. What should I do? And I always say that you should start earlier. Don't quit your job. Don't sell your business yet. Get that you said saddle time. Get that time in. By the time that you're ready, you're way ahead of the game. Trade the small. Practice, learn the skill, and then show me you can make $5 a day. We show you how to make $500 a day. That consistency matters.
Yeah.
I mean, you wouldn't do anything like becoming you wouldn't say, hey, I want to become a doctor, so I'm going to quit my job and become a doctor.
No,
right?
No one does that.
You go to your regular job while you're paying for your education. You get your education, then you do your residency, then you do your internship, then you actually get onto a floor position. Now you make money. Now you get to quit your other job. Right. So a lot, and that takes like 8 years to 12 years or something if you're going to be like a medical doctor. I mean, stock trading may be a little faster, hopefully, but
yeah, I think it's a good point. I mean, this is a profession. This is not something you decide. You see a couple posts on YouTube or some Twitter feeds. People are saying, "Oh, I'm making $3,000 a day or $2,000 a day." This isn't something you can just go and sign up in next week and make that much money. It's not as easy as I would say a lot of people make it out to be. It takes, so it takes practice, and as Andrew mentioned, we've got the tools to allow you to practice and get a feel for what it's like to trade without having to commit any of your capital. So very important.
I hope it's not as big as a medical school. It's not as long as that one. It's shorter, but definitely requires that.
But this isn't something that you take 2 weeks at a night school course and all of a sudden you're a great trader making a couple $1,000s a day.
And the reason why, right, is obviously like most performance endeavors, there's psychology that's involved here, right? So, you can go to a website and that website says that I can give you these 3 simple steps and you can now trade an ABCD pattern, right? Well, that's great, except for the website doesn't account for your mental ability to actually execute that pattern, right? Can you follow rules? Is that in your personality set? Do you have risk tolerance? Can you, all of these different things that will never come into play, until much later. But this would be like the difference between being someone who can drive a car really well versus someone who's a race car driver. Right, a race car driver can drive a car really well at 210 miles per hour, 1 inch between a wall and another car, right, while riding drafts, right? It's a high performance. The difference between being, a professional quarterback versus being, a high school quarterback. There's just a level of, endeavor that has been achieved there. And if anyone's aspiring for that, you need to understand it's going to take time. It's got to develop like anything else. There's no quick solution.
Perfect. Well, thank you so much, guys, and really, really appreciate that. Had a good week, day trading wise, not swing trading wise for me.
But my willow's up. my bag holding stock is up. It's up 40. It's up 48 now. So every week we'll give you an update on how far down.
Live, you're all gonna see what happens to these $700,000 lost on my account. Everyone's gonna see that. Yeah. So
1 week at a time.
Anyway, are you back holding anything, Thor, or no?
No. I don't swing trade, so I'm all cash right now.
Okay, well, we can get you into something.
I had trouble. I tried doing swing trading before, but I started learning to swing trade during the Trump era. So it was like, one day the market's up, the next day the market's down 700 points or something like that. It was just a really bad time to try and get involved in that. But maybe now that things are, maybe after some ranges break, I can start looking at getting into some stuff. I just want to short though, which makes it difficult.
Well, I'll send you some suggestions.
I like it. I'm in.
Okay, now we're getting into it.
Yeah. Anyway,
thank you so much, guys. I appreciate that, and have a good long weekend.
Yeah,
see you all Tuesday morning.
Enjoy your weekend, everybody.
All right. Thanks to everyone. Thanks for having me on, and happy MLK Day to everyone.
Thanks.
Cheers.
Happy MLK Day. Bye.